Hi, I'm Mandy Feely-Swain, and this is another episode of Origination Boost podcast. My guest today is Matt Kuglin. Oh, I said it right, right? I said
There.
it's like you told me cougar with a lens. So Kuglin, I like that.
Yes, yeah, you pronounced it perfectly. How's it going?
Very, very well. I'm happy. It was a great weekend. How about you?
Yes, yeah, I've been traveling a lot this year and got some time. It was a very low-key weekend, so got some time to spend with my wife and 2 daughters. It was needed.
I love that. I love that. So tell me a little bit about yourself. Where do you live? How long you been in the business? The basics.
Yeah, yeah, so I'm, born and raised in Georgia, and I currently live north of Atlanta in, Alpharetta Milton area, if you're familiar with Georgia at all. Um, yeah, I did not think that I was gonna have a career in mortgages, that's for sure. So, fell into the business right out of college. I knew rates were low. This was in 2011. So after the crash, a lot of FHA streamlines, all that good stuff, but, started, with a company where we were primarily lead based. So it's consumer direct. We were doing the lending tree, lead point. I was actually one of the people calling those Experian leads that now we have not liked for the last couple of years, which is funny. Uh, and then I did that. I managed for another direct lender. I had about 25 different loan officers that reported to me in the Southeast. And my wife got pregnant, and I realized I needed to pivot and not be in the office for 60 hours a week. So stayed in the same industry, but kind of in a different lane. Moved over to retail or reaching out to realtors and builders versus doing kind of lead based type
Yeah.
originating. And that started in 2020. And I'll never forget when I made the jump. I was going to be the preferred lender in a Keller Williams office. It was my first day. I walk in, I'm bright eyed and bushy tailed, just ready to get going mingling, and the team leader, head broker, of the office of Keller Williams walks in. He's like, "Man, I'm so sorry. Like, we're being forced to shut down the office due to COVID." Yeah, so I remember thinking, "Oh my goodness, I just made this huge leap. I had a salary and bonus and all this stuff, and was going back into 100% commission." And I remember calling my wife on the way home, like, "Dude, you need to call our insurance. We need to call insurance, get our premiums down, like, cut all, crazy additional costs." It turned out to be the right lane for me, instead of sitting in an office and managing. So yeah, 15 years, which is crazy to say.
Yeah, so your journey and my journey is very similar, except I've been doing it twice as long as you. Uh, but I think that the benefit to where you started is on that lead side of things is you cut your teeth on a lot of loans very quickly, right? You learn those, you got a lot of ups. Where some people in the business are starting and they're building those realtor relationships right out the get go, and it's a little bit slower grind, right? The more loans you touch, the faster you learn. And you and I had a great mentor, and mine was a little different. It was, let's see, 1998 after rates had spiked to 8%, like in seven, eight. Anyways, I ended up doing a lot of streamlines. Well, you learn just how that to pick up the phone, and that people can come through the phone and get you if they're angry with you. You learn a lot of great sales skills. Um, but if you're a newer loan officer and starting out, and you're gonna start introducing yourself to agents, what advice do you have to those folks? Because it's a little bit different than you and I started.
Yeah, absolutely. You said it really well. Having so many at bats and having the experience of messing up files and talking to clients when you may have made a mistake, that's important. But yeah, if somebody's starting out in retail, I think, and a lot of realtors do this as well when they're starting their business. It's like, hey, Matt may have 40 clients that he's working with. I've got no one. I can zone in on any client that you bring me. So I think those conversations are different. And I think honesty is really the best policy. Not acting like you know everything, but hey, I'm newer to this business. I promise you that if I don't know the answer, I will get I'll go to the underwriter, whoever it is, to get the correct answer and relay that to you as fast as possible. So I think newer loan officers just need to realize that showing that you're hungry is the quickest way to start getting business. People appreciate it. I mean, it's the same for us when we've got insurance people that are reaching out to us. When I've got someone who's consistent and they're doing it the right way, they're not being annoying, but they show they want my business. Those are the type of people that I want to reciprocate to and send business their way. So that would be my suggestion.
Yeah, so lean into what their value proposition, which is that they're not as busy, right? They can have hyper focus on those clients that need help, and you and I are we're working with more established relationships over our career, and so getting those new relationships going and having the same touch point maybe isn't as high as somebody that doesn't have the networking that you or I do after all this time. And, I think that the lesson here from both Matt and I is that the mortgage business is a marathon, and it's built in sprints. It's a marathon, it's a long grind, and it's built in sprints. And so you will be sprinting as you get started. You're sprinting to build that business. You're sprinting to build your database. And then over time, the business gives you sprints, whether that's a refi boom or, D refi plus, like Matt cut his teeth on, right? As the business was, coming back after the market crash, or COVID presented opportunity. I think those opportunities come in waves. But it is, to me, the business has been built on sprints, and then you get a little slower and things get a little quieter. And that's when I feel like for my team, that's when we build strategy. What does that look like for you now, 15 years in? There are times that, I mean, it's hard to stay in that abundant mindset that there's always more business. I think that it's key, but sometimes even as a leader, now that you're leading a team and you have this successful business and you're a top performer year after year, there are times that I don't know. It's like, okay, okay, what, how are we doing? Why is things a little slow? What am I going to do? Or are you? How do you handle that in your business?
That's funny. I literally right now, we've had a lull for maybe a week and a half. I track applications, and I think anybody who's trying to build their business and maybe even 5, 10 years in, watching and monitoring lead flow, how many applications you're getting, contracts. A lot of people just kind of haphazardly run their business. I'm not extremely organized, but I do know how many applications we're getting week by week, and that's a big indication to me as to how many calls we're getting. So the last 2 weeks have been slower. And I think this time of year with kids going back to school, it's pretty standard. But I reached out to two people that are on my team, and I was thinking, hey, I'm going to call through, all of my contracts and just reach out to the listing agents directly instead of having, you know, some support staff do that. Yeah, and that was just an idea that I had. I reached out to the team and say, hey, let's do this while it's slow. So it's really utilizing the slow times to either get organized if it's been very abundant in business before that, kind of get things structured. And then also realizing there's always stuff that you can do during a downtime to try to generate business. It always comes back. So being the one that's not kind of woe is me mindset and trying to figure out how I can drum up business, I think it's very important to think that way.
Well, you built a team. At first, it was just you. I'm sure just hammering it out, right? It's just like up to your eyeballs. You're building a business, and you have. It sounds like you had a family started, and you're trying to manage that work life balance, which I think is hard to even. Those words are hard to even say out loud in the mortgage space. But like, what's your how did you start your team? Or how did you have work life balance? Or what's your advice on that level for somebody that's up and coming, right? That's at that, precipice of being moving from a single originator to hiring somebody and investing in their business. It's kind of that also is another jump, I think, in a lot of top producers' business.
Yeah, yeah, it's a great question. For me, I did exactly as you said. I was building the business basically. I felt like by myself. Realized that I can get very detail oriented when I need to, but that was not my strong suit. That wasn't the zone I needed to be in. So eventually, I got my business up to probably around 25 to 30 million. And I think my company and I realized I need somebody who was really zoning in on the details. And I ended up, I'll never forget, this is a pretty good story. So it's during the pandemic. Um, they had some resumes that were coming in literally 5 minutes before I was supposed to do a Zoom call. I'm looking over a resume, right, for who I'm going to interview and realize that this person was the assistant vice principal of my middle school while I was in middle school at the same school. So we're popping on. I hired her on, very detail oriented, and she helped make sure that when contracts came in, we had the right documents, sent out documentation needed less. So I think people who are trying to take the next step and they've got the business coming in, first hire is definitely somebody who can support you and do the things that you're not great at. And then I think next step is there's kind of operations and sales side to every team and every mortgage company, right? Trying to get somebody who can help you with your lead flow. And then as business starts picking up, then getting support staff to, support that. So that's what I've done and how I've built my team.
I love it. So this last year, I heard you speak at Mastermind, which was awesome. Um, you kind of stepped into that realm of just paying it forward because you have learned in your career, and now you share that with other originators. Um, what do you think what's made your unique value proposition? What's your secret sauce that maybe makes you different than somebody else that's giving you the longevity in the business?
What's my secret sauce? I will say hire.
I mean, maybe I wanna share the secret sauce, but maybe your UVP, maybe your, market positioning, maybe I don't know, in Georgia what it looks like compared to Idaho, but, yeah, what's kinda your thing that makes it work for you and that has agents and referral partners and, database coming back to you?
I think first and foremost, hire people that are smarter and better than you are, which I've been blessed to do that successfully. Um, and I think for me in my market, relationships are so key, and I always put that first. I mean, I'm consistently staying in front of my agents. I'm putting myself in a position to meet new agents where it may be a good personality and business fit. Um, People know that I um, have high expectations for what's going to happen when I get a contract and when I'm working with a client. And I think that word has spread of, we don't miss appraisal contingencies, financing contingencies. I haven't missed a closing date. I can't tell you how long. So
That takes stress out of the picture, right?
it
That takes
does.
stress off an originator, not to that's when you're riding lightning on that last week. That's seriously stressful for a lot of originators, and then you're not marketing, right? So, the fact that you put processes in place and systems to ensure that you're meeting those appraisal contingencies, the financing contingencies, and then meeting the closing dates probably helps you minimize stress, because business can be stressful because every loan has its own nuances. But with that said, uh, you were able to do that, and what you said that I think resonates with me is hire people to skills that maybe aren't your highest and best level. Like you said, if you're not super detail oriented, get somebody detail oriented. If and you said hire people that are smarter than you around you. And I think most leaders that are really good leaders that would give it up to their team would say, I've hired people that are smarter than me and ask in areas of my humanity that I'm not as good at as they are.
That's right. Yes. Yeah. And this business is stressful. That's why I don't have hair anymore.
Well, I have hair, but I do color it every couple weeks, so that So when you were initially building your realtor relationships and you hustled, right, to get those deals going, and then you proved yourself, and over time, what I think is so true and been true in my business is reputation builds reputation. So what I would tell LOs, and maybe you'll have some insight on this, is even if you have to let a deal go to maintain your reputation, that is far less costly than having a really bad, um, loan experience for your consumer and the agent, because that plays for a long time, and that costs you a lot over your career.
Absolutely. Yeah. I learned early on not to overpromise and underdeliver. And I think that's especially as you're starting your business and I remember trying to get my first leads from realtors and the human mind wants to just anytime you're getting something and they're following up on it, oh yes, I can do it. I'm going to figure this out and saying yes, 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 yes. Really what we have to do is get to a spot where yes, we're still kind when we're responding, but giving proper expectations. So that I think that's a big thing that a lot of people that are new in the business figure out the hard way. And if you can figure that out fast, you're going to have a much better career, in my opinion.
Yeah, for sure. So, as you've grown from an individual producer into this leadership position, how do you, what processes have you put in place to ensure that that your team does it the way Matt wants it done?
That's tough. I think that's tough for anybody in a leadership position in any industry. I think trying to spend as much time with the people on your team as possible so that they're seeing what you're doing, they're hearing you is extremely important. I also think hiring is one of the most important parts of this job. I mean, you get a bad hire, it's very difficult to spread away from that. So taking the time to really make sure when you're hiring, doing personality tests, like we always do the disc. We've got probably 3 or 4 that we have people fill out so that we know kind of where they're at on that list, and then meeting with them, hiring slow. I've never been good about firing fast, but luckily I haven't had a lot of people that I've needed to do that. So, yeah, I think just spending time with them, letting them try to mimic you and your style, and everyone's going to be different. I've got somebody who's on my team who he's very similar to me, but he takes what I do and he kind of puts his own spin on it, but it's still within that realm. And I think you just have to be quick when things are not going the right direction to step in and say, "Hey, this is not the way we're going to do it, and here's why."
Well, and to that point, I'm interested to find out on the disc assessment when you're looking at your sales versus your ops people. I think I know the answer, but how does that look on their profile? You know, dominant, influencer, stability, and compliance. My guess is, if I had to guess, influencer and dominance are your sales team, and your S and C's are your ops team.
That's right. Yes. Yeah, I think I retook it. It was maybe 7 or 8 months ago, and I'm tied like 98% D, 98% I, and then my S and C. I think I've got the lowest. It's either the lowest C or the lowest S in the company in the organization. So yeah, you got to fill that. Your operations is going to be more on that SC side. You're exactly right.
So I ask this of a lot of originators, but I think it's so important. What is your why? Like on your hard days in this business, what makes you put your boots on the ground and do it again?
I love that question. And I've told this story before. So one, it's the quick answer to that is family. Well, 2 parts, family and then competitiveness. So I've learned to kind of put myself in a position to where my back is against the wall. Financially, I'm in a great place, but that can kind of put you in a lull, right? It stops that drive. So I remember I made the decision to tell, she was 5 years old at the time, that I was going to finish our basement. And she would tell her friends we'd have friends over and she'd, oh, my dad, like when I would be on a call, she'd, oh, my dad's trying to get the basement for me. So, it got to a point where it's like, "Hey, I have to finish this basement," yeah, I've gotta bring it in a business to be able to do so. So, yeah, I mean, why is definitely family that gets me out of bed. My wife loves to travel, and I want her to have as enjoyable of a life as possible, so do I, and then I really wanna provide for my kids at the highest level and make sure that they want for nothing. Some days, it flips over and I'm extremely competitive, and I've gotta just pull out that competitive nature. But I try to wake up every morning and be grateful for the opportunity that I'm alive, and just realize that no matter what's going on, I'm in a spot where I get to help a lot of people and financially, make a lot of money, which is why we work.
Yeah.
So I try to utilize that and zone in on it on days that may be a little bit tougher.
Yeah. I talk a lot in the book, I talk a lot about gratitude and how that has been a grounding force for me in my business, especially when I started to come back in 2012 and kind of rebooted my business. I was like you, and I was managing a team, and I was like, I got to get back to the front line. And I think, you're a frontline leader, you're there, you're doing loans, you're still willing to do the work that brought us into this space, that brought us into the business. And so I very much respect these folks like you that are frontline leaders that have deep gratitude for where they've been and where they're headed, because that makes all the difference, I think, in longevity in this business, because there are days that you're like, "What am I doing?" Even 30 years in, friends, what am I doing? And so I'm sure you have days like that that you're like, "Dear Lord, it's like Groundhog Day again and again and again." But I do find that my gratitude for, waking up and breathing fresh air, or remembering that I went to bed and have a healthy, happy family, those small things that are big, um, helps keep me grounded, and I it sounds like you're there too.
Yeah, yeah. I think one other thing that I think a lot of people struggle with, and I've seen this with people on my team, is some days we just don't have it. I mean, it could just be energy levels. It's literally, your genetic makeup. Trying to push through, I think sometimes does make sense, and you've got to do that. But other times you need to realize this may not be a day that I have it, and it's a better day for me to, go to the pool or whatever it is. So I'm very I try not to be too lax, but lax in the term of being understanding that not everyone every single day is going to be able to grind it out. And I think from a burnout perspective, that helps me and people on my team be successful.
Love that, and I think to add to that is celebrate those small wins. Whether that was you saying, "You know what? I can step away today and I can take a personal day to refill my cup so I can go at it again and be a lone warrior." Um, I think that celebrating the small wins that you have, even on your days that you're a little off, at least for me, I'm like, "Cool. I made the calls I need to make. I sent emails to the people I need to send to. I scheduled events and for my future things I'm gonna have happen." I think that sometimes we forget to celebrate small wins. We're just looking for the big win, and if you do that, then that's also that meter does not get filled very easily on the days that you're not having it, right? So I love that you're like, hey, if you need to take a break, and so you can get recharged, so you can grind again, right?
Yes, ma'am.
So you obviously have invested in yourself for coaching, and I want to get your take on this. Why did you invest in that? What is your advice to originators that maybe are struggling? I mean, I think, what is it? 46,000 LOs are out in the last couple years of our business. So maybe you can just take us on that journey of why you decided to invest in you and your business on that side of things.
Yeah, yeah, and I was blessed that the person who brought me into this organization, he's, the president and, part owner, and he's ultimately been my mentor, and before, I came to this organization, I didn't really have anybody. It was just guess and check and failing, and I think that's part of why I hit certain numbers but didn't reach the potential until I came to this organization. I think what's important about coaching is you're going to get out of it as much as you're putting in. It's easy to say, oh, yes, I'm doing coaching, and you're sitting there listening, and then you shut your laptop and you're not doing anything. I think it's extremely important. I've got a sports background, so I think it's a little bit easier for me to implement what I'm told if I'm believing what they're saying. But I think finding the right person who has done what you're trying to do, and not just from a financial perspective or how many loans they've closed, but I think it's very important to look at their personal life, as well. That's so important. So for me, I found somebody that checked both boxes. I felt like was, more intelligent than I was, and I bought into it.
Yeah, I think, having somebody you look up to, respect, and are like-minded with is key when if you're gonna invest in yourself, invest in coaching, and I think that's true, like, if you're gonna invest in coaching, actually do something with the coaching, right? That's the hard part about coaching. You can be on a call and get rah-rahed and then do nothing, and then it doesn't serve its purpose, right? So non-negotiables, you must have some to be in the business, to be a top performer. There must be some things during your week that are non-negotiables, like things you must get done in order to have residual business. What are some of those non-negotiables, or how do you manage your week, you know?
Yeah, so I am, and there's been some phenomenal loan officers that have worked for our company or even outside that I've heard or done research as to how they run their days. And there's a lot of people that have been successful that are way more structured than I am. And I know that. For me, if it's too structured, I'm gonna burn out. So, like you said, there's certain non-negotiables for me. I'm not time blocking. Sorry if that's something that you preach to on here, but I don't
Nope.
set up. It's too residual for me. It's like
Each to their own, man. There's so many
yes,
ways to slice the pie in the mortgage space that
yes,
I'm always fascinated to say, you know, each top performer does it a little bit different, and that's what makes us great. And so if you aren't systematically time blocking, so be it. Yeah, but you've got to have some non-negotiables,
yes.
or you wouldn't
I
have a
do.
plan for your team, right?
Yes, yeah, I do. So, for me, appointment set is extremely important, and that's what I try that and applications or lead flow. Especially when it's slowed down like this, that's when I utilize time to set up appointments in the next week or 2 weeks and try to fill up my calendar as much as I can. Um, I think I said earlier, relationships, that's how I've built my business. So the more I can sit down with somebody and connect with them, that's important. So really that's what I follow more than anything is just the front end coffees, lunches, network events, or whether we're throwing an event and bringing people in. That's what I monitor on a weekly basis. And then I'm constantly checking my pipeline on a daily basis, probably 2 to 3 times a day, just looking through making sure there's no one that I need to reach out to or someone on my team does. So those are the main focal points for me.
Salespeople, do you think how much of their time do you think should be spent doing that piece, the networking, the talking to agents, the calling the database, those sales activities out of a day, what percentage would you say is necessary in order to win?
80 to 85%. Yeah.
Yeah,
I mean,
so if you're listening, you hear that, you're like,
yeah,
"Wow, so 80 to 85% of Matt's time is used finding new business."
yes. Yep. Yeah. And really, I'm trying to find ways to increase that percentage. Right now, and that's where you work on systems on the back end. That's why I've got someone who's here in the office with me trying to figure out how I can pull away from the time in which I'm responding to emails, how I can do that quicker. We're starting to incorporate AI into emails and different things, just to try to speed up the time. I always tell my team the more that I'm on my laptop working, the less money everyone's making. So yeah, it's 80 to 85% would like to get that up to 99.
They need you out there seeing people and shaking hands and kissing babies, I guess, as the old saying goes, right? So how would you say if you had to reboot your business today, reboot your business and starting at 0. And this is a hard question for me because it makes me a little bit have a little bit of anxiety thinking I have to start from 0 because those days were hard. But let's say we're both there and we need to get a reboot in our business. What are we gonna do? Like this, let's go. We need loans. What does that look like?
I think, and I said this at the mastermind, in the beginning, you're just trying to get any leads that you possibly can. And what I learned early on is that not every agent is the right agent for you. Not, I've had agents that unfortunately I've had to step away from and basically fire that didn't respect my time or really me. So going back, I think I would do more research on who locally, who I want to get business from. And I think right now the beauty of social media and everyone utilizing that on the real estate side and even builders is you kind of get to learn personalities. So doing more research up front and getting a target list of agents and figuring out how you can be around them instead of just cold calling. Yeah, I cold called just like everyone else and reached out and 500 people and scheduled 3 lunches and two of them ended up rescheduling on me for 6 months. I realized quickly that that's not going to get your best result, and it's not very efficient from a time perspective. So I shifted over and did more of what I would call stalking in a non-weird way of, hey, I know this guy looks like he plays golf. I love to play golf. Where does he play? Can I reach out to him and maybe see if he wants to go play golf or yeah, yeah. So I think to answer your question, just really starting as localized as you possibly can around your area. I think that makes a lot of sense and making sure that the people that you're reaching out to and trying to get business from, it's like-minded and then grow from there from your reputation.
Yeah, it's so true, and I do think you can spend a lot of time calling random people and book 3 lunches and then have 2 no-shows, and then you're like, "Wow, that was a lot of effort." So, I think if I had to start from 0, which may again, I'd go back to the people in my sphere, the people that love and know me, and I would ask them which agents they know, because it's a lot easier to meet somebody from an encounter that you have that somebody cares about you as a person, then and be able to have authority to say, "Hey, my good friend, if so and so said I could call you," and that makes that call a lot easier to palate than it does just randomly picking up the phone, or leaving voicemail after voicemail. So that'd be one thing, and then, of course, I always say my title company friends are just invaluable, and I think that that's an underutilized resource for originators, in the field. Title can provide so much and has introduced me to some of my biggest, relationships that my team has. So those would be my 2 reboots if I had to reboot, and, Matt's gonna do it a little bit different than I would, but that's the beauty of this business. There's no one right way. There's just you still need to do it at the heart of who you are and the spirit of who you are. Matt's gonna find people that play golf and connect on a golf level. I would have no clue how to do that. So that's what makes this awesome, right? Is there's so many ways to do it. I have one friend that started in the business, and she just basically is on Facebook groups of moms, and she's just there and chatting with people in those groups and is building her business, which is phenomenal. So again, so many ways to slice the pie, but that's why I love this podcast is because it shares ideas that originators are doing, and it may just trigger with you. One nugget in a podcast might might get difference in your business and get you some loans. So I love that you said that, and I'm glad we're on the same page. So you're clearly competitive, whether it's mortgage, golf, or basketball. Oh, where does that drive come from? Did you play sports as a kid? I don't play sports. I cheer. I was more go fight win on the sidelines. We should no athletic ability, so I'm always props to those that have it. But where did that come from for you? Started at elementary school. What was it? I mean,
I think two different. So yes, I did play sports, and I ended up playing basketball, Division II basketball for a little bit here in Georgia. But my dad, so both of my parents are psychologists. So I've got an older brother that's 4 years older than me, and my dad is very competitive, and I think he was good about not in a negative way, but kind of pinning my brother and I against like whether we're playing ping pong or on the trampoline playing some game. It was just kind of, I think, having a sibling that you're competing with early on that starts that competitive nature. And then that continued with sports and middle school, high school, and some college too.
yeah. So do you? I love healthy competition, and so I'm always applauding when people are doing well and or they want to beat my team's record because if they want to beat a record of mine, they're coming with the right mindset, right? The minute somebody tells me, "Manny, I can't do the loan volume your team does," that's the minute I know you can't because you just actually put it out to the universe. And so I love when people say, "Manny, I want to. My goal is to, beat your team's volume for the month." For you and I, my guess is, and you're just even visiting with you for just a little bit and hearing you speak at Mastermind, um, my guess is that you and I are aligned in the fact that we're competitive with ourselves. I want to be Team Mandy's best record, best year every year. I wanna beat last month. I wanna be better than, year over year. If last year September was slower, I wanna definitely crush that number this year. I have a tendency to compete with myself and compete with my own numbers. What's your philosophy? Where are you on that?
Yeah. So early on, I mean, I've been basically 100% commission other than when I had that managerial role for a little while. I wanted to exceed from an income perspective. I just started that as my goal really early on of every year I want to make financially a little bit more than I did the year before. And I've just kept that mindset every year, and I have. I've never gone backwards, so I'm constantly trying to think of ways of improving. I think it's important. You said something that I think is very important is a healthy competitive nature. I think you can get to a spot to where it consumes you, which I really try to stay away from. It's more of just kind of a helpful driving factor. I don't ever want to see I don't want my success to come at someone else's demise, and I think that's very important, and I see a lot of people talking about other loan officers or things, and I'm like, "Man, that's a slippery slope to go down." So I think anybody who has a competitive nature, or you're trying to kind of pull that out of yourself, just make sure that you utilize it in a healthy way.
Absolutely. So, what advice are you giving to customers right now? I think a lot of loan officers want to know this from top producers. They get some clients that are like, "Well, the payment's too high," or I'm going to hold off buying, or and you and I both know this is false. That there is going to be some crazy, market reset with, of the recession era. I don't think that we're ever going to get there again. Thank the good Lord, but I think that in some ways, coaching those consumers to buy the home now and understand what they're buying now is key. So, for your team, what's your coaching for clients that are like they come to you and then they're like, "Wait, I'm gonna just hold off. I'm gonna just rent."
Yeah, no, I think, it is extremely important to truly ask questions, and there's a book that I've read and I reference a lot of times, How to Win Friends and Influence People. It sounds like a manipulative title, but it's a lot of impactful stuff, so if you're, watching or listening to this, I would read it. It talks about asking questions, not just to ask them, but truly engaging. And I think that's so important with customers is really try to find out what's motivating them to potentially purchase a house or even refi. I know those are few and far between right now. But if you really understand what they're doing, sometimes my response to people is, I think you're right. I think even though I can qualify you, I think maybe 6 to 8 months or 12 months, that makes sense with you potentially changing your job, different industries. People that are more concerned about the market and interest rates, but I've dove deep enough to understand that now probably is the best time. I'm coaching them through. I think right now, at least in my market, it's an opportunity. Houses aren't selling as quickly. They're on the market for 30, some 60, sometimes 90 days if they're not priced properly. Now is a time where you can actually get some deals on houses. And this business is very simple. And when rates are down, which we saw in the pandemic, it is a feeding frenzy. And personally, I think when you see rates in the fives, that is visually for clients a very important number. Everyone is expecting, for rates to drop down into the fives. So if you get locked in a house at a lower price point and then refinance, I know that's everyone says this, what is it? Date the rate, marry the house.
Yeah.
I hate even saying it. All right. So don't put that on there, but it's true. I mean, right now, if you're trying to get a deal, take a little bit higher interest rate. And when rates pull down, values are going to go up and you're not paying a higher price. But you're able to have both wins, lower price point on the house and capture that lower interest rate long term. And that's where you really build wealth. And yeah,
Absolutely. Right when rates go down, appreciation goes up because, like you said, more people are active in the market. But right now, I'm seeing seller concessions and builders giving concessions, and almost more than I was during pandemic by far. And we're able to get those rates down. The temporary buy downs have been great. I think at the heart of the matter, though, as a consumer, you've got to remember why you wanted a home in the first place. People needed a home for many, many reasons, but I think sometimes you've gotta stay focused on that, and on the other piece of advice I heard was, um, the highest house payment you're ever gonna make is today, and the reason that is because most folks like Matt, are trying to make more money every year. And even if you're a W-2 wage earner, you're going to make more money in your future endeavors, most likely, if you continue to do a good job at your current employer or you get a new opportunity. So as that income goes up, the payment stays fixed. that's the highest payment you're gonna make is today when I close your home loan, and in the future, that goes down. And the other thing is even going through the crash and having 7 homes, during the crash, I think that the thing that I remember most is I don't lose that money unless I sell that house. So, just remember, re real estate is not a quick fix, get rich quick, flip houses scheme. If you're buying a home, buy it and live there and plan to live there, right? And I think that that mindset is helpful too, is just real estate. If you're buying it for your family, be committed to that home.
Well said.
Yeah. What other advice do you have for consumers out there that are because this will probably ultimately end up on social media and somebody wanting to buy a house. Um, what are you seeing? What are you seeing in your market? What are opportunities other than seller credits?
Yeah, I think right now, if you have the funds, investment properties are a really good option. And every company has different pros and cons. We've got phenomenal pricing on our investor loans and a lot of different creative financing, like prepayment penalties that can reduce the interest rate. I think right now, with the lack of um, competitiveness for each house, if you're potentially thinking about being an investor, I think now is a great time to do it. Like you said, there's more on the builder side with those temporary buy downs that can make sense. I normally coach through that based off of if there's a projected amount of income increasing with the temporary buy downs versus doing a permanent. But yeah, right now, because we've got so much flexibility of how we're structuring offers, if they're good about telling me what their goals are and they know, hey, I want to be within this payment range, I want to be within this cash to close range, then it's my job to say, hey, for this particular house, here's how I would structure it. This is how we can come close or meet exactly what your goals are. So I think talking to the right person, the right loan officer is extremely important when you're looking to buy, whether it's investment, second home, or primary.
Yeah, there's lots of options available and lots of down payment assistance options available if they haven't saved for the down payment. Investors, if you've thought about getting in the market or you have a lot of equity in your own home and you're wanting to utilize that equity, get a HELOC. Um, I think awesome advice is get a HELOC when you don't need a HELOC. I know that sounds crazy, that you're going to get a loan when you don't need a loan, but that's when banks give you money is when you don't need it. And when you absolutely need it, they're probably not gonna give it to you or it's gonna be more expensive. So I like that, and I use that concept with customers a lot is it doesn't cost you anything to get a home equity line, but it gives you a chance to leverage your home very quickly if a rainy day comes, or in your example, you wanna buy an investment property, leverage your asset over here to make you money over here. So it will I all of that advice makes this business for loan officers that are listening. There are so many opportunities in this market, but you've gotta dig, right? You've gotta dig for those opportunities. I'm sure Matt, when he was just talking about prepayment penalties or, you know, non-QM or debt service coverage ratios, the not that kind of space anymore. A lot of loan officers aren't necessarily digging in to learn product and product. I'm a product geek. So I like to learn, because I want to present every option to my customer that fits their needs. And so, are you seeing more DSCR product in your market and that being used or non-QM product?
Oh yeah, absolutely. Yeah, I'd say non-QM this year, we've been at close to 20% of our business, which is, I think the year prior, we were maybe at like 8 or 9%. The DSCR and investors love that product because the majority of investors are self-employed, pulling in all of your tax returns and doing all this crazy stuff. It is one of the most simple types of loans that you can do. Basically, we're just looking at to make sure that your projected rent is within reason of what the mortgage payment is. So that has been used way more this year than it has in the past. Like you said, non-QM with bank statement products, that's come into fruition a lot more. So you're exactly right. Being able to get creative and talking to somebody, and sometimes banks, that is the best option for you. Not nothing against the bank, but I think working with someone like you and I, who we've got flexibility of really almost every product that's available on the market, you never know if that loan officer knows their products well. You could be paying a higher interest rate versus going with a better product because we've got a long list.
How did you become the resident? I mean, I'm fascinated because I'm like 2% non-QM. I want to know your ways. How did you build 20% of your business this year as non-QM? Did That's just what's happening in your market space, or everybody knows map that, or what happened? Because that is a significant amount of business in the non-QM space.
I think, a lot of it has been happenstance. It's not necessarily been me trying to position or market myself that way, but there's just been a lot more investors that have reached out this year. I think with inventory increasing and smart investors realizing they may be able to get a little bit better deal. So those are the leads that are coming in, and our pricing on DSCR is actually better than just going with a conventional. You know, you can go with a conventional investment property type of product. So it's just shifted that way for pricing and from the type of leads that it come at. But
So you'll put a prepayment penalty on it because the investor knows that they're going to keep the property 3 to 5 years, the depreciation rate out, and so they'll take a prepayment penalty and be able to get a lower rate than say a Fannie Mae standard C30.
yes, exactly. Yeah. Yep. Even the non prepayment penalty options, those have been more competitive on our end too. Um, I do think when the market shifts, this is something that I've noticed. You got when rates are low, everyone's looking to buy their new primary, and they're more um, W-2 earner of 500,000 plus or 100,000 plus. If they're a first time home buyer, excellent credit, kind of more cookie cutter. And this type of a market, it's more of people that are trying to get creative. So I think that's shifted and increased the non-QM business.
Now you've got me fascinated because now from next time I get asked for an investor loan, I'm definitely going to have to do a cross comparison of the two. So, if you learned anything today, we learned that knowing your products can help you gain business. Remembering why people want to buy homes is key. And Matt, you are awesome. I'm so grateful that I was able to see you speak, and I'm so grateful you said yes to being on my podcast. And it's nice to have a new friend in Georgia. I'm actually going to be out there next month to see some friends of mine in Brunswick. So, at any rate, I wish you and your team so much success. I hope you slay 2026 on to 27, and know you have a friend in Idaho. So, thanks for being on my podcast today.
Absolutely. I've enjoyed it. Nice getting to know you. And I still can't believe that you've been in this business for 30 years. You started when you were 5?
Thank you. You and I were fast friends. Yeah. Well, I was like, oh, I tripped into business like you at 19 years old. I ended up at a front desk with a phone, and that seemed remarkably adult of me to have a desk and a phone. And so I couldn't spell FHA. I had no idea what a BOE was, and Fannie Mae and Freddie Mac were foreign entities to me. And so, yes, at any rate, I've been in this business basically my most of my life, and I'm very, very grateful for the opportunity to be in the mortgage space and work alongside amazing humans that happen to do home loans like you.